I retired rather quickly without a solid plan. And so I've been, as they say, flying the plane while building it. I'm noticing along the way a serious gap in my retirement plan. So I'm wondering whether or not a reverse mortgage might be able to fill that gap. Welcome and welcome back. Thank you for supporting my channel. I retired 3 years ago at the age of 49 from teaching, and I relocated from New Jersey to the more affordable Delaware. I'm currently on an early retirement journey to financial independence. But since I retired without saving, in the course of, continuing to learn and research about what I need to do to become financially independent, I'm noticing that I have a serious gap in my plan. I don't have long-term care savings and I don't have any long-term care insurance. So I'm wondering whether or not a reverse mortgage might be able to fill that gap. My initial understanding of a reverse mortgage was that instead of me paying the lender pays me. And I could receive a lump sum or a monthly amount or a line of credit that I could dip into whenever I wanted based on the equity of my house. And the best part about it would be that I wouldn't owe anything unless I move, sell the house, or die. And so basically, I would be able to have extra money in case, let's say, I need in-home care. Then I would be able to pay some long-term care bills without having to sell my house or rely on Medicaid. And that sounds great, right? Like a miracle. So what's the catch? I've been learning more about what exactly a reverse mortgage is and how it works. It's very similar to a home equity loan, but it has additional special terms. For example, you have to be 62 years old and have at least about 50% equity in your home in order to qualify for a reverse mortgage. So I went back to some of the original resources I have been using in order to shape my retirement journey. And this book had the best advice. It is an older book published in 2009. So the AARP Retirement Survival Guide. It has a chapter that explains all about reverse mortgages called Cashing Out of Your Home. And so that one helps a lot. Another book this one is more recent, How to Make Your Money Last. So this book has a chapter called Home Sweet Income, Producing Home. It not only gives updated information about new regulations that supposedly protect people better from some of the problems that come with getting a reverse mortgage, but it also talks about long-term care in detail and different options. So what I learned is that, like I said, they make it sound like this is some kind of miracle, but basically a reverse mortgage is a loan. And so by taking on this loan, I would be taking on some serious debt, which is the opposite of my plan of financial independence. And the more I learned about it, the more I realized that it could do more harm for me than good. It might be good for some people who don't have children, but I do have children and, hopefully one day grandchildren who I would like to leave something to. It's called a reverse mortgage because instead of paying down my debt, I would be adding to my debt. Every time I receive that check from the bank, it would be increasing my debt. And because of compound interest, high fees, closing costs. By the way, the interest would be a variable interest rate, so it could go up to about 10% more than whatever the original interest rate is that I sign up for. Because of all of this, I would be just losing more and more equity every time I borrow money, and possibly lose all of the equity in my home. I also learned about a government program called HECM, Home Equity Conversion Mortgages. So these are reverse mortgages insured by the FHA, the Federal Housing Administration, and they service loans for up to about no, they service loans for up to about 1.2 mil. At first, a HECM sounds like a safe bet because there are protections in place that would guarantee that I'd be able to stay in my home for the rest of my life. But getting a HECM would involve paying a very high mortgage insurance premium, which again would contribute to that compounding interest that grows over time. And there are a lot of ways that I could default on the loan. And so there are so many rules involved. Here are just a few of them. I wouldn't be able to sell the home. I wouldn't be able to give the home to my children or to put it in a trust. If I were to move from the home, for example, if I would need to go to a nursing home for, I think it's 12 months or more, I would lose the home. And if I were to get behind on paying taxes and insurance and upkeep on the home, I could lose the home and the loan would become immediately due. Now I can understand why so many people are against reverse mortgages and say that they're predatory, because they can take away homes from elderly people. And even if that's not the intention, it does happen a lot of times. Another issue is, would the amount I would get that I would qualify for be even worth it? Earlier in this video, I was playing around with a calculator that gives me an idea of what my loan would look like based on my home value when I'm 62. And I'm noticing that if my home value is not much, then I won't really be able to qualify for much. And basically, I would need my loan paid off, because otherwise I would have to add a closing cost. I would have to bring some cash to the table in order to receive the loan. So that's another thing that I don't know if the amount I would qualify for would even be enough for the type of care that I would need. In fact, I learned that having a HECM could actually interfere with your qualifications for Medicaid, because it would count as a source of income, especially if you receive it as a lump sum. The biggest question I had was, how would this affect my heirs? Well, upon my death, the loan would become due, and it would be my children's responsibility to pay it off by selling the home. Well, what if I live a long life? Over the course of, let's say, 20 years, the original amount that I would have borrowed would grow. It could even grow to like 40% of the value of the home, and I would have lost equity over the years, and maybe all of the equity. And then by that time, after the sale of the house, there might be nothing or very little left over for my children. So will I ever use a reverse mortgage? Maybe. And you might be surprised to hear me say that, but the way things are looking now in my retirement plan, if I ever need long-term care, I will, one way or another, lose my house. I would have to sell my house. And I'll talk more about that in another future video about long-term care and how this gap is a serious problem in my plan. Meanwhile, I have time to think about it. I'm 52 years old and I wouldn't qualify for another 10 years. And so this book, the AARP Retirement Survival Guide, has a really interesting resource that I will check out, in addition to a lot of other resources. But there's one that it calls the Bible of reverse mortgages. It's a 96-page Fannie Mae booklet all about reverse mortgages. So you can find these and other similar books by searching 332.04 in the stacks of your local library. That is the personal finance section. And how about you? Are you familiar with a reverse mortgage? Have you or someone you know used it as a strategy to create an income stream in retirement? Please comment below. I would love for you to share more about this gap in my retirement plan in a future video. Stay tuned. Like I said, you are following along in my retirement journey as it unfolds. This is the real deal. If you found this video valuable, please give it a like, subscribe, and share with anyone else who might find it useful. Thank you. Stay inspired and keep thriving.